For the moment, let's invite Gautam Sinha of Motilal Oswal Mutual Fund to speak to us about what are his buys and sells at this point in time. Good afternoon, Gautam. Thanks a lot for joining us. Well, the big divide in the market is between NBFCs on the one hand, private banks and public sector banks. What is your pecking order?
See, we continue to be invested in the private sector banks and select NBFCs. Valuations are richer, but that's true across the board, across the market. We are not still very interested in the PSU banks. The recap of course helps, but I think the entire growth and ROE aspect will take some time to come back. I'm not saying that it's not going to come back, but I think that's at least a year away, especially on the growth side. So that's something that we'll wait and watch. And you know, with this kind of trade, the way that the pricing happened in one fine day, it's very difficult to get back later and try to participate. That doesn't really make sense for us. Yeah,
50% in a single day doesn't leave much on the table, does it?
Absolutely. Gautam, if you could just hang on, we're getting numbers from Natco, so let's get some street estimates going as well. Profit at 84, one of the estimates was at 94. That was an estimate by, I'm just checking which brokerage, Edelweiss was calling for 94. Let's watch out for what the rest of the business has done. The Tamiflu component is what we are watching out for, and Ekta was telling us that that contribution will be slightly subdued from that big portfolio for Natco this time around. That's the only number that, okay, so the revenue is down about 9%. 84.4 is what the revenue estimate, no, the consolidated profit. No, I think that we'll have to correct
that
flash. The profit.
That looks good.
Yeah, the revenue number will just come up on the screen. We are expecting a slight decline. 6% is the decline.
It is an 8.8% decline.
Yeah.
Okay. But I mean, I'm sure this is not the comparable number. This is the consolidated net profit, which is better. I mean, decently better, about 25% or more. And that's the consolidated EBITDA, which is looking again very good, about 16% higher. So it does look like at the bottom line level, Natco as well has delivered very well. The stock is getting rewarded as we speak, 2.6% higher. The consolidated numbers looking good for Natco, you'll have to say. We had some estimates, did we?
Yeah, that's what I'm saying. The revenue estimates were quite varied. I mean, there was one brokerage calling for a 6% decline, another calling for a 6% increase. The profit line seems to be more or less in tune with some of those street estimates. But I don't have the press release breakup to see how sort of the business
I have, but
internally.
It's just not moving. I mean, it's
also a pretty difficult print to read. So let's do one thing. Let's just wait by. We'll get, okay, now we have the EBITDA number. And, okay, that explains why the stock seems to be quite happy, because at the operational level, that's a good show.
EBITDA and profit have been good. But I really wish that we can get to the press release quickly. No, that's just not working over here. We will have our team trying to analyze and putting out if there is anything further to be known on Natco Pharma. No, it's just the P&L. There isn't anything else on the BSE website. So those are the numbers, relevant numbers for you. Okay, Gautam, that actually leads us to the next question to you. Pharmaceutical stocks. After the happy news on Divi's today, you saw all of them soar. Have they bottomed out as a sector? You're buying some of them?
No, actually we continue to own some of them, but not incrementally buying, because clearly the pressure in pricing in US generics is still not over. We don't know where the bottom is, but we are getting to the point where the supply side will now start reacting. Supply side consolidation should start happening at a greater pace. It's already happening, and that eventually might lead to some better pricing, but we are far off from that. So the pricing cycle is still bad, and that's not something that is very interesting as of now. We hold on to some names which don't have too much of US generics exposure, more of India or rest of the world play, or part of US generics which is not under pricing pressure, but the core problem is still there pretty much.
Okay. What are you buying then incrementally, Gautam?
So we continue to like two clear spaces. One is the retail financial borrowing space and the retail financialization of savings that is happening in the country. I think financialization of savings is the biggest theme for us.
You can't buy your own stock, can you?
At some point probably we can, but haven't done that yet. But it's an interesting idea. Thanks for sharing.
Okay, so retail, wealth management guys are the ones that you like. And retail financial products would include private banks and NBFCs?
Pretty much. Private banks, asset managers, even insurance in India, as you know, is largely asset management, right? So
we have a long list of asset managers,
spaces.
do we?
Yeah, we do.
What within...
And the general insurance guys are also coming into play, so that's also a very interesting space for us.
Yeah, so I was just getting to that, because NBFCs is now such a big list. I mean, different categories altogether. Yeah. So what would your pecking order be? It would be sort of asset managers first, followed by insurance, or how would you go about it?
So, you know, insurance is quasi-asset management in India. So insurance and asset managers, and especially because so few asset managers are listed or wealth managers are listed. And if some of them are, but they are part of an SOTP because they're a subsidiary within a larger company. So the pure play you get today are insurance companies, essentially. General insurance is another space that we like, where penetration levels are pretty low and are increasing. So that's the most exciting pack for us from a 3 or 5 year growth perspective.
Well, can I persist with one more subsector of finance, housing finance?
Sure.
You have a few in your portfolios in a couple of the funds. Is it, I mean, there are a couple of problems probably with the sector. They all came out with 45%, 50%, revenue growth or AUM growth or disbursal growth. But real estate companies tell us that there isn't so much of houses that they are selling. That's one quandary for me. And the other one is, will they now face aggressive competition from the PSU banks as they get capital?
See, one thing is for sure that there is growth in this segment. So if you see the reported growth of mortgages, that continues at a mid-teens level. So that's definitely there. There's a disconnect between what's happening by real estate constructors and what's happening on the growth of mortgage book. But that's been there for a while. And that is worrying for sure. That's probably shows inventory drawdown, or maybe...
Somebody told us it's because it's affordable housing in tier 2, 3 or 4 cities, which are not in listed stocks. Do you buy that?
Yeah. Partially, because see, the tier 2, tier 3, tier 4 cannot contribute hugely to the AUM, right? So they can be, you have to apply the Pareto principle there. So they might be 20% of the portfolio. So a lot of it might be just, inventory drawdown. Right, and we are also, but you have to just go by the reported numbers of mortgage growth, which is pretty impressive. Beyond that, we also have the largest play, which is a conglomerate. It's just not housing finance; it also has those asset management and insurance subsidiaries, so which also makes it much more interesting.
Gautam, obviously yours is one of the better performing funds. I mean, it's been quite a marquee sort of year. It's beaten returns. It's also been pretty top of the league in its own class. So I'm sure you're getting lots of new retail money. So what to buy now is the question. I mean, are you also looking at largish mid caps? I don't know. Are there certain themes that are in the mind, whether it's specialty chemicals, any pocket of consumer that you're willing to play? Where is the alpha?
I think beyond the financials bit that we spoke about, Select Autos continues to look good.
Select is Aisha, is it?
and the car play,
okay.
The only listed one. So that continues to look good. Aviation looks good. So and you have seen the result lately. Fairly positive outlier set of results there. We also like gas as a space because that's one part of within the energy basket. Clearly, there is going to be a migration towards gas, and that's ongoing. That'll be a great feature to play on for the next 3-5 years.
And which part of the gas chain? I mean, regasification plays, people who run gas grids, or sort of.
I think there is good scope in everything from pipelines to the last mile to the landing stations of LNG. So it is a generic theme which looks very
only
good.
There are a couple
we
of
also own oil marketing companies.
Yeah, point taken. Gautam, it was always a pleasure speaking with you. Thank you very much for joining us with your thoughts on several of those sectors. We have to take a mandatory break. Coming back with more market talk, our experts are still with us.